Hey, what's happening, everyone? Aaron Jackson here, aka Rotation Report, aka ATM Charts, aka whoever. This is not financial advice. Is it a bottom or the bottom in the growth and tech stocks? We'll see. We'll see. But let's set the table really quick. Okay, we've got retail inflows, highest ever. Me, you, we're the market. That's not great, but it's been fine so far. Last week, though, hedge funds, single stock shorts, higher than the level we saw at the breadth low of the 2022 bear market. So I'm not good. You can't rule out anything here. I don't think you can. We've been hating on software, software versus metals. We'll get into it, but let's just chill out, not rule out anything at the moment. But a lot of things have changed. A lot of things haven't. But man, there's more gaps in this market than there is in the Epstein files. I was thinking, wow, what happened Thursday night? And we have just unfilled gaps everywhere. So the key question I have is, how are those going to fill? Definitely keeping an eye on it. So with that, we might as well just get into it. By the way, this time, remember to click the button so you can look at that. The charts popped up. Hell yeah. But yeah, so we've seen a lot of data lately, advanced decline lines making new highs. That's very nice, very bullish. However, the underlying backdrop remains like it could be a broad rally, but an unhealthy rally. Now, I don't know what the fuck that means, but let's just stick with it. There's a lot of earnings bull markets out there, right? A lot of good industries. And I think it's basically these mega cap tech stocks. They're spending this money like crazy. All these the biggest companies in the world, they're all in these momentum indexes and the growth indices, and they're just spending like crazy. The costs are exploding, and they're not stopping the spending. So it's trickling down to like hundreds, maybe 1,000 plus companies, maybe something like that. So, broad, but generally unhealthy. You look at the consumer discretionary versus staples, like even if you equal weight that, still the same signal. Consumers not in the best shape. So I don't know, but it's definitely not a picture perfect market here. But interestingly, 10-year treasury yield tried to break above that 200-day. We thought it bounced there, and now look at it, kind of trying to roll over a little bit. So I don't know. We'll see. It's been gappy. It's been a little back and forth, but if this could roll over, then holy shit. Well, there you go. A little interesting case for your software there, your growth a little bit. And then I don't know what's going to happen with this dollar. It looks pretty clear that, rollover is the setup. We'll see. Clean back test, and now it's just kind of consolidating there. Time will tell. And then, boy, momentum factor ETF MTUM. Look at that. Fake breakout, but then again, we've got all these moving averages that came into play Wednesday, Thursday, Friday last week. Back to square one. I would say probably still think it rolls over. But if it does, it would be a big rollover. And, again, this is like a lot of your Mag 7 stocks. But one of the positive things is this networking index has taken new highs out this week. Very good looking index. And it's not your typical all the favorites like your Coherence and your Lumentums and all the optical transceivers and all that. This is a lot of, aerospace and defense exposure as well. Utilities like telecom, all that type of shit, that type of networking. But I think we got one in here. What do we got? Cisco Systems reports earnings tomorrow night, and looking good. Just broke through the tech bubble peak right there. Is that a 25-year base breaking out? It looks like it. I think they just announced something for the AI agents, new for the AI agents. I don't know. We'll see about that. But you notice in the semi rally, the memory has not participated. Micron did not participate, and we know it's a shortage, but now there's some supply coming on. Samsung just ramped up some HBM supply. So definitely watch out for the memory. That could be the one that is the problem here. Networking over memory for sure at the moment. Do the Drake meme, no on memory. Yeah, on the fucking on the networking. And speaking of, how about Apple versus the Mag 7 breaking the downtrend post ChatGPT? Is this the winner in AI now? We just going to be running Claudbot on freaking our side max? I think we might. I think we might. Very interesting. So I think if we're going anywhere, it's Apple. And another interesting note was because they're not spending as much on the AI like everyone else, just going crazy and then borrowing all this money for the cash flow, to fund the investment, they're still just buying back more stock than everyone else. So, well, that's one way to get an edge. And then, we've got NVIDIA. That was a hell of a move. But honestly, like I was saying, there's gaps everywhere. Didn't even realize there was actually a gap from that last weekend that got filled. So, we don't care. It seemed to be a top. Maybe it's not. Maybe it's not. Give us 1 through 196, 197, and hold above it. All right. Then you're cooking with gas. Until then, still just kind of think this is just kind of like a nothing burger. Maybe a top, but it's going to have to happen soon for the symmetry, the time symmetry. You'd want to see it here. It would be like this is the top now, starts falling apart in a week, kind of like you would see in that momentum. But interestingly, SoftBank here, they tried to keep it under the 50-day moving average. It's back above it after holding the 200-day, and we see the Google. Alphabet just dropped a 100-year bond. And people couldn't get enough of it. And that seems fucking batshit. 100 years. Like, how many companies last 100 years, but oh well. And if the funding for the AI is there, then, SoftBank probably is fine and remains in this uptrend. And maybe that has broader implications for Mag 7 and all that other stuff. But, one day at a time here. But we'll see how that plays out. And then, yes, look at this. Software versus semis. Do we have the bottom in software versus semis? We've seen the hedge funds. They were very aggressive with the shorts last week. We've also seen some data that showed they were just like, ridiculously, taking the other side of that trade with the hardware. So that's kind of interesting. This chart is like, if gold versus oil had a tech cousin, this is it. Like it's just very overdone, below that 2002 low. Will it continue? Are asset-light businesses terrible ideas? Yes, probably. But like when we're talking software, what do you mean software? There's databases. Like, you think the databases are just not going to have awesome growth? No, that seems like bullshit. So, you got to be really discerning, like between like maybe a Salesforce and like, MongoDB or a Snowflake, those type of names. And then, so is it the bottom or a bottom? And I think it's a bottom. Small cap growth versus value here. We talked about how it recently lost the uptrend off that 2022 low. And very oversold, short-term little bounce here. Can it continue for another week or two? Sure. But the broad message is get out of shit growth on strength, I would say, and then rotate elsewhere. Do you want to buy emerging markets? Sure. Do you want to get some industrial exposure? Sure. So just something else, just energy, something, just not the shit growth. Like maybe you could say Oklo, you could say some of these things, maybe your quantum, that type of shit, that type of garbage. We'll see. And then, S&P, this is just Vanguard value versus growth, which is basically, S&P growth. And it's a lot of the same with the hyperscalers and your JP Morgans, all the same, all the names we're all familiar with. And it's just like, there's a little bit more room here. There's definitely more room here, but whatever, it can kind of consolidate for a couple weeks, right? And then XLK versus the S&P 500. Yes. Lost the 200-day moving average. Looks like it's lost a lot of progress here, doesn't it? And now just today, well, not quite. Well, actually, right there, back testing that 200-day moving average. So is this the end of the XLK relative strength for the last few days? Could be, but you never know. And then Mag 7, again, Mag 7 relative strength, fresh new lows, continues in this downtrend, not at a low. It would be shocking. I think it's just big tech stocks continue to be a cash register. Push the money elsewhere, wherever that may be. And then, but if we did buy a software stock, I'll tell you what, DigitalOcean, this fucking thing, 52-week highs list yesterday. So, a software name in the middle of the SaaS apocalypse at 52-week highs, multi-year highs, seems, 4-year highs seems bullish. I don't know when those earnings are. They're not yet. Maybe a couple weeks or something like that. But yeah, if we do get another leg lower, I'm definitely looking for entries in this digital ocean, because what are they up to? Are they in the Claude? Are they related to Claude somehow? Maybe. And then, yeah, you look at something like Palantir. It's like, yep, massively oversold, but not a lot of gap in the chart. Maybe one up here, but still a top, still a corrective bounce. Hasn't even taken out that, pre-earnings low. So definitely still expect something like this to trade lower. And then software, like, yeah, we want to, okay, we can be bearish software still if you really want to. I mean, the logic is there, but look at the move in this thing, 110 to 80. Okay, like when do we short it? You want to say 89.90, something like that? Okay, we're working off oversold. It's just like not the time. Like you can pick a better time to be short like things like software, right? And that might be what we're seeing here in software versus metals. The metals super extended. We're all talking about dollar debasement and all that stuff, and the steel's good, all that, but it's less supported by earnings and more supported by governments. So not the greatest, and it's just really overdone here in software versus metals. Like you can at least have a conversation about buying the software first. And, you haven't been able to say that for a very long time. And just given how the overbought versus the oversold versus the narratives, it's kind of interesting for a bounce. Is it actually going to hold up here? Or is this just a few week little bump in the road? Good question. Don't know, but would expect it holds at least for a little bit. And then here's Microsoft. You had that trend pivot. Is it going to recover that little pivot here? Is that close enough to the 200-week moving average? Maybe. That's a lot of distribution there, isn't it? That looks a little capitulatory, but even if this recovers it, I don't know what we're going to do with it other than just trade it kind of versus this pivot zone. Say you get up to 440 or 435, and then what are you going to do? I'm not sure. I'm not sure there. But Oracle, nice bounce off the 200-week moving average there. Again, like whatever you think about Oracle, like it's overdone on the downside. Like, and yeah, retracement to about 200, something like that would make a lot of sense here. We would have preferred to see 125, 130, something like that. You get 133. So something a little lower in those mid 120s. And also no one cares, like, oh, well, like, right. And then BP, very interesting one. They cut their dividend today because they wanted to shore up the balance sheet. So it had just had this big 16, 17-year breakout. Look at that thing. And we'll see how this thing closes, if it can catch a bid here in the coming days, because if it can kind of shake this off, that would be an epic entry area. But then again, British Petroleum, European energy. I don't know about that. But now let's see if we can get a reversal here. That would be a sick entry. And then keeping an eye on the 3X bearish financial ETF FAS. It's kind of, it topped out last week. That was kind of a positive surprise. But, it's not really breaking down. It's more of a consolidation. So not really sure if that's all out of the woods. There's some funny things happening in insurance too. So, the private equity, the insurance, eventually it's all just going to add up, but we'll see. Keeping an eye on it, no doubt. But I'm sure everyone else is too, right? So, and then next up, we've got United Rentals. Been keeping an eye on this thing because it's been hot industrial, benefiting from a lot of things, but sold off on earnings. You got the earnings gap fill, but now this is also a key resistance zone. So is it just earnings gap fill and rollover? That would be just about the first thing industrial wise to be like, oh, hey, red flag. So we'll see. And then Coinbase again, like, yeah, okay, Coinbase. Are they a bunch of bullshitters? Probably. Do you want to buy the stock? I don't know. Do you want to buy or short the stock? Ooh, probably lean no. Maybe you get a retest of that low there, 140s, but like just so extended. Look at that thing halved. Like most of crypto, like Solana, Ethereum, all those things were like They shaved off 40% in a straight line in a month. That's if that's not capitulation, that's a problem, right? Like that's a hell of a move there. And what else? What else? Ah, yes, we've got Circle. So yes, keeping an eye on 65 and Circle. What are the stable coins or whatever? If you get this fake breakdown here and it kind of holds up above 65, hell yeah, I'm in on that. We'll see, we'll see. And then notice in some of these metals, it's been a sick run. Something like Century Aluminum, we've just got less momentum here now, right? Awesome run, insane strength, but the momentum is kind of drying up. Steel, kind of the same thing. SLX. I just want to kind of throw that in there because, like, it's getting to the point where it's like, okay, maybe we need to start thinking about some exits. I haven't really gotten there yet, but definitely worth keeping an eye on. And yeah, so that'll about do it for me today. And I appreciate you guys. I hope you guys have a great day. And if you like the video, do me a favor and like the video. And until next time, friends, peace.